Some reason.
And I try and figure out how I can sit here and see my audience.
Yeah. Well, we got you on this camera.
Oh, it's that one too. Okay.
Yeah.
So actually, I can turn this one on.
Yeah,
Good morning, everybody.
right? He can turn.
Morning.
Well, I think we do. Oh, Marty, we got their names here. Yeah.
I usually write about it when I see them, but it's their, however they log into Zoom, it's not necessarily saying, sometimes it's.
How does that look if I would like on the camera for Zoom land? If I'm looking here, they get my good,
All right.
my good side.
This,
The Zoom is looking at you straight on.
But if I turn,
that's
Turn this
okay.
way.
Don't worry about it.
okay.
We hardly get anybody on Zoom anyway, but we do put them on, we put these on our website so people can go back and look at it. So
Okay.
more, and we direct people to it so that we'll get a bigger audience
Perfect.
ultimately. So.
Thanks. Okay.
All right. Well, good morning. It is 9 o'clock. And so we're going to begin this exciting insurance session. Welcome to the Community Officers Association of Singer Island. I'm Julie Botel, president of COSI, and this session is about what board members need to know and residents and citizens in general need to know about insurance. So we'll begin with a roll call of COSI members. Barb Hanson. Here. Frank Fernandez, I know he's not here. Bill Contole. Nick Hadley. Mike Slosser.
Here.
Good. Hi, Mike. Marty
Hi.
Zippert.
Here.
Hi, Marty. So I want to take a moment to thank our COSI board for all the volunteer time and effort they put into making this season possible. It's truly a volunteer effort, and I'm grateful for their commitment. And I want to thank you all for being here today and for your engagement throughout the season. The sessions that we planned this year are based on a survey that we did last season, before the season, and we took the highest ranking, most interesting topics, and those were the sessions for the season. And we'll do the same thing this year. We'll send out a survey. So please be on the lookout for it when it comes out and let us know what you'd like to see us do. And I would like to turn it over to Barb Hanson, our treasurer, for our treasury report.
Short and sweet, we have $5,336, a few cents in the checking account. One coming bill that has not yet been invoiced, so hasn't been paid. It's going to be about $500. We have small taxes due. And then, of course, the accountant's fee for preparing the 2025 taxes.
Great. Yep. Thanks, Barb. Great. And so our featured presentation today is Brendan Lynch from Plastridge Insurance Company. Brendan has extensive experience advising condominium and homeowner associations across Florida and has been a trusted COSI presenter for several years. I think, how many years have you been doing just insurance, not COSI?
27.
27 years. So Brendan is not a newbie to this world. So he consistently delivers practical, relevant guidance to board members, and we welcome him and thank him for presenting today. Brendan.
Thank you, Julie. Thank you, everybody that's here in person. I know we have some people on Zoom as well. I've been involved with COSI and Sika and Singer Island and insuring buildings on Singer Island. I think we do 38 or 39 buildings. My company for over 20 years. It's always been a great group, and I've always appreciated how you all work together and with a common interest. You know, there's several groups out there that have also tried to do this, but I think you all get the long-standing award. They sort of, somebody will take up the flag and get it going, and then if that person either moves on, moves away, or isn't with us anymore, sometimes those groups fall apart. But I've seen the COSI baton being passed pretty well over all these years. So congratulations to you all.
1988, right? Bill? COSI 1988? Yeah. The only reason I know that is it's in our email address.
Yeah.
So I won't. This is a little bit about me. As we mentioned, 27 years. I own the company. My brother and I run the company. It's 107 years old. We started in Delray in 1919. Imagine what Delray Beach looked like in 1919. So It's actually been in my family since 1947. My grandfather was an auditor and audited insurance agencies and met the Plastridge family and cut a deal to buy their house and their business on one contract in 1947. So we've been around a long time, and I've done a lot of things in insurance. You know, I've chaired the State of Florida Association, many other things, but it's a good business. But as you saw in Florida, we get these incredibly violent swings in the market. And we saw that from the end of 2019 until kind of mid-year last year. And now we're seeing the market recover quite well. So some of the things I wanted to cover with you all is how do we get here, creating a hyper competitive property insurance market, navigating a hyper competitive insurance market, liability market update, and some strategies, some things that you can talk directly to your insurance agent. Now, I happen to be your insurance agent in some of the cases in the room, but this is more designed to help you talk to whomever you're using to position yourself for a positive outcome. Oh, sorry. And then some kind of rough numbers on what we're seeing in the market for pricing. Now, many of you at this point, Singer Island does a lot of the renewals on Singer Island are kind of in the Q1 to early Q2. So most of you, I would say, have probably already done the renewal. If you haven't, you're probably coming up for your renewal in the next 30, 45 days. Very few associations are going to have their insurance come up in hurricane season. So we hit this wall where you're not really seeing a lot of activity in renewals. So in insurance, we refer to market conditions as a hard market and a soft market, similar to real estate with your seller's market and buyer's market. The hard market is what we went through in 2019 to kind of mid-year last year, where we saw Citizens Policy Count, which is the state insurance program. They went from about 450,000 policies to 1.45 million in under 2 years. That is an absolute market collapse. 13 companies went out of business. Many other companies left the state of Florida. It was literally the worst market Florida's ever seen in that period of time. And if you were on your board or you were paying attention to your association insurance line item, you saw the impact of that market collapse. We were seeing, renewals going from 30% to 60%. And in some cases, if you were due to get an appraisal to revalue the building, you had the cost of construction driving up those appraisals. And it wasn't uncommon, unfortunately, to see 60 to 100% year-over-year change in insurance premiums. One of the other things, and I actually did a presentation, I think last year, and covered some of the shift in the market. But one of the things that's always under the surface is these billion-dollar weather-related disasters throughout the United States. And I have a couple of updated graphs because this information to me is really telling. So this is from 2024, and you can see that at that time we had 27 confirmed $1 billion or more climate-driven natural disasters. Now, what's interesting is when I went at one point to update this information, the NOAA website was shut down because they got hit by natural disaster.
Oh, geez.
Because NOAA picked their headquarters on the eastern seaboard or East Coast in Asheville. They determined, after probably spending a lot of taxpayer money, that this is
Safe place.
the safe place. This is where we need to have our headquarters because it's protected from natural disaster. It's not.
Clearly.
This is one of my favorite restaurants. I have a home in Asheville, so I spend time up there in the summer. It was underwater. I literally, before I left to come back to Florida, I had dinner there with some friends. This is their house.
Oh, my God. Are they
So,
well insured? Brenda?
yes. Actually, it's funny you say that because I'll tell you a quick side story that picture that we all saw last year in hurricane season of the construction dumpster that was sitting on top of
Yes, yes.
the house in Avenir. I learned about a month after that disaster, I happened to be sitting next to somebody who lives on Singer Island and had just bought a residence there.
My brother-in-law.
Was it?
Yes.
And he said to me that he met the person that owns that home that ended up with a dumpster on top of it.
Mhm.
And that person told him that they ended up not buying any insurance because it was too expensive.
Oh, jeez.
And that's a total loss, you know,
Yeah.
that because
Wow.
it was compromised structurally. So you know, a lot of people say to me, and it's happened even recently, you know, I self-insure for wind, you know, and they say, you probably think I'm crazy. And I say, no, everybody has a risk tolerance. I don't think you're crazy. As long as you've looked at the numbers and you've made sense of it for yourself, it's a very personal decision. But you do live in Florida. So, now this is a very recent one. I just pulled this information. I love these charts. I don't, you know, I'm a kind of a data nerd, I guess, but so this is 2025 and kind of here's another look at it. But what I found really, you know, that's just always so interesting to me on these charts is that, you know, it's a very recent problem. You know, that if this chart goes back to 1980, so you know, from 1980, there's this says that there's 431 events that have happened from 1980 to 2026, and it totals 3.1 trillion. But then if you look at 2017 to 2026, a 9-year period, 44.5% of the events were in that 9-year period, and 1.5 trillion in cost, or 48%, were in that 9-year period. So 1980 to 2026 versus 9 years. And the 9 years is half of the weather-related disasters. I mean, this is not a political thing, but no one can reasonably say there's not a shift in climate-driven issues. When you look at these numbers, it jumps off the page. So the insurance market, you know, insurance operates off of a historical perspective. Okay, so if you're an actuary and you're looking at this chart, how do you adjust pricing forward looking when you're looking backwards, right? Because you have to adjust for this or you're not going to be around. So my opinion is 27 years, 3 generations, you know, of insurance in South Florida, we're going to continue to see these violent swings in the market. You know, everybody in this room, including myself, who we own all of our office buildings and buy tons of insurance myself, we're glad to see these premiums come down. And in many cases, the premiums for the buildings we insure saw 25, 35, 40% decreases this year. We're happy that our clients are seeing that, but it's just going to happen again, you know, that they're just going to spike up again, you know, that you know, I was at a conference and sat with a friend of mine that's the CEO and runs at a big insurance company. And we were talking about this and he said, we will F this up again. So he didn't say F this up. He said, and because, you know, insurance goes through this, you know, where they kind of disappear, then they come in and they crush the market, and then the market shifts again, and everybody premium skyrockets. And what that translates in Florida to is we all are in the private market, we all go to Citizens. We all go back to the private market, we all go back to Citizens. And that's what that shift looks like from a consumer standpoint. Because when the private market disappears or isn't viable, we all have to run to Citizens, the state program. So imagine running a company where your client count goes from 450,000 to 1.45 million in 18 months. Now, imagine being an insurance agent that has to work through that, dealing with people that have been, that basically were hired yesterday into a basic disaster, So navigating those shifts from a agent standpoint, trying to serve our clients is very challenging. We affectionately say that Citizens hires from the DMV. That's, and it's very challenging. So it frustrates board members that deal with this. It frustrates consumers on a bigger scale. It gets Florida headlines in the Wall Street Journal and other national publications. It makes us look relatively foolish when we see these headlines in the paper. But to my friend that's the CEO of the insurance company, he's right. They are effing it up again. We're going to see another violent swing. Now, it's a crystal ball question on when that happens, but it will happen. 100%. It will happen. I've seen it. This is at least the fourth one I've seen, in 27 years. So you all have seen this before when we talk about the other thing that plagues our state, which thankfully has been somewhat addressed and will kind of play out over a long period of time, is the fraud and the litigation. We tend to be national leaders in this category. Not exactly where we want to be number one or two, but we tend to be. But there's just an absolute ton of fraud. I still, even after we saw major tort reform and major changes, I still get a text message at least probably 2 or 3 times a month. And it usually says, hey, we're in the area giving free roof estimates and inspections to see if there's been any damage from insurance for an insurance claim. And what's interesting is, because we own a lot of buildings, and so I get these here, and then I own some property in North Carolina in 2 very different areas. I get text messages from all of the texting me to say, we can do a free inspection, we'll do your claim, it'll cost you nothing, and you'll get a free roof. They literally put it right there in a text, So I think my point is, like, when Florida has now addressed some of these drivers to this problem through tort reform and some other legislative measures, the people that benefit from this type of thing are moving to other states. When I get in the car and I drive my 2 dogs up to North Carolina because my wife and sons fly, lucky them, I'm seeing billboards that are very familiar to us here in Florida, in Georgia, South Carolina, and North Carolina, that weren't there just a few years ago. So as Florida has tried to repel these people out of our state, they're just going to the next state and the next state. Now, lucky us, they're not here anymore or not as relevant, but the other states are going to have to catch up. This is just another slide that talks about how much money this is before the legislative changes.
Wow.
You can see that, because a lot of times the people on the other side of this issue will present the issue as being unfriendly to claimants, unfriendly to policyholders. So these numbers, this is not something that I did. This was done by the Office of Insurance Regulation by the state of Florida, these studies. And you can see that of the amount of money that was paid, only 8% actually went to the claimant, because we had an environment, a legal environment, that allowed attorneys to make an unbelievable amount of money while the issues presented that they were helping claimants recover, it really was lining their pockets in legal fees. So one of those issues that was changed was the repeal of what's called a one-way attorney fee statute, which basically means that if a claim is presented and insurance company says this is how much we're going to pay for the claim, claimant gets an attorney, sues the insurance company. If the amount they initially said was $10,000, if they pay $1 more than $10,000, they pay the full legal bill for the claimant. And so what we would see is a claim that went from $10,000 to $11,000 and a legal bill for $75,000. That's why that number looks so big on the previous slide. I'm in this picture, like, where's Waldo? I don't know if you can find me. I can't even find me. But this is up in Tallahassee when we were getting rid of the assignment of benefits, was another way that the fraudsters were using statutes to abuse the system. You have a claim, contractor comes in and says, sign here, I'll go after your insurance, and you won't have to pay anything. You won't even have to pay your deductible. They go and squeeze every bit of juice they can out of your policy, and then come back and they do, let's say that they got 50,000, they do $75,000 worth of work in your home, and then they come after you for 25,000. So here's some of the legislative, I won't go through these, but the point is there's been a lot of effort to change some of this nonsense, but I think we can agree that in a general sense, government is not in front of problems. Generally, they're reactive to problems, which means that when they do react to them, it takes time for that to impact the market. So a lot of what we've just talked about was all liability based. I talked about the property market recovering and doing quite well. The liability market's still lagging. The premiums have kind of leveled off. We're starting to see better coverage in the policies, better terms from the companies. We were seeing some really egregious exclusions in the condo association general liability policies. I was seeing exclusions I had never seen before. Water-related bodily injury. That's where somebody slips on anything wet, the pool, the lobby after a rainstorm, no coverage. So yes. These are things that in 22 years I'd never seen, and 5 years they started popping up on certain quotes. Exclusions that are, an absolute exclusion for liquor liability. That could be somebody went out to dinner, had one glass of wine, they come into the building and they trip and they sue. There's no coverage because they're going to say they were consuming alcohol. Like, these are the things that agents have to really look for, because you don't want to find out about these exclusions after something's happened. There's one real quick. This is a real unfortunate situation. We just started working with an account down in Miami that has $100 million verdict against it. It's in appeal right now, but $100 million. It was all over the paper. It involved a child of a state representative, and it was a shooting. It was a domestic dispute issue. The ex was with another woman. The ex-wife or girlfriend came to the unit, still had a key, opened the door, shot at the new girlfriend who was able to run away, shot and killed the ex-boyfriend or husband. The association was sued. The security company was sued. The management company was sued. all of those were able, well, actually, the management company tenders to the association, because if you read all of your management contracts, they all say that you are responsible as the primary and hold harmless and waiver indemnification against the management company.
Hmm.
So right now, that $100 million verdict, I believe the association's on the hook for close to 90 million of that.
Jesus.
And their policy had a limit of $50,000 for assault and battery, with defense cost inside that limit. So I have an email 3 months after the incident. The attorney that was assigned by the insurance company sent a letter to the condo association board and said, "We suggest you seek counsel. We are almost at the policy limit." 3 months. 3 months after the incident, they burned through $50,000. Do you imagine what that legal defense was? And they still ended up getting $100 million verdict. So those are the things that, insurance agents really have to be careful. Yep.
Don't they have to show some form of the condo association or the homeowner in private homes? There has to be some level of neglect. If I leave my hose out and don't wind it back up and somebody trips over it, then you would say that that homeowner had some level of responsibility not to leave a tripping hazard out.
Yep.
In the examples that you gave, there's no neglect. There's nothing an association could do in those condo developments to deter any of what you just described, isn't it? So it's like the wild, wild west, really. I mean, people can sue for anything,
Yes. And
but only in Florida, because that doesn't happen in the rest of the world.
yeah, I think, there's definitely areas that are more reasonable. But the real issue is, and if you've been on your condo board for more than a minute and you've experienced a claim, you're likely to experience frustration with the fact that you think you had a case that was black and white, open and shut, easy win, layup, and the insurance company settles. And everybody gets frustrated with that, but if you live in my world, what you see is the insurance companies that go to court and try to win, they get just crushed by our system. Like, they get crushed. So they're looking at this as a pure balance sheet play. Like, hey, I can get out of this claim for 50 grand, even though I have a winnable case in other jurisdictions. But in South Florida, if I go to court against this little old condo unit owner, I'm going to get crushed. And I'm going to get a $100 million verdict, because I agree with you. It's unbelievable, that I have a case right now in an HOA where, unfortunately, an elderly woman fell asleep smoking in bed. I didn't even know that happens anymore, but it did. And she is not with us anymore. And she lives in a quadplex. It's an HOA, not a condo. So everybody's responsible for their unit, right? Fortunately, they were doing a roofing project, and the project manager showed up early to get everybody started, saw smoke, and pulled everybody out of the 3 units because they would have all died. This fire was unbelievably intense. The family of the deceased is suing the association for wrongful death.
Why?
Now, this family
for
the last 3 years has stopped by once a week, dropped off a bag of groceries and 2 cartons of cigarettes, and they were there for 10 or 15 minutes at the most. And this woman was very obese and elderly and immobile. And their family is now suing the association for neglect, for wrongful death.
On what grounds?
Right.
They brought her the cigarettes.
Yes. And that's a client of mine. So now we have this huge reserve on our loss history and an open claim that probably will take 3 years to resolve. Meanwhile, their policies, their liability has gone up, their excess umbrella liability has gone up, Their directors and officers liability premium has gone up. I mean, it's out of control, and it's a claim that shouldn't even exist. So, yes.
So at no point can a judge determine this is admissible and it will not, and doesn't, I mean, how much influence do the judges have on these cases? They're totally unreasonable and obvious
Yeah.
that the other three homeowners had nothing to do with this, the HOA had nothing to do with it. It was irresponsible on the part of the family that was catering to this woman,
Yeah.
who obviously shouldn't be living alone.
Right.
So can the judge step in?
So what I see is most of the time the other side goes right for a jury trial. You know, it's, you know, they don't even consider a bench trial. I'm not an attorney.
It's in their favor.
Yes. Oh, yeah. All you have to do. Yeah.
Let me give you a little background.
Okay,
I
yeah.
get the stuff.
Oh, okay.
Okay, what you're asking, Mary Ann, is, yes, there is a way for the judge to step in. And people file a complaint.
Yeah,
Judge files an answer. Go through some machinations of what they call discovery. And then if one side thinks the other side has absolutely no case, they move to what's called summary judgment. And put down the facts and say, you know, this lady's fat, we didn't have anything to do with her smoking or protection. And the other side then has a burden of bringing forth facts to show that there is some basis for the jury to find the defendant liable. If there's no facts to support it, the judge grants summary judgment, the case is over. But that's very difficult. You got to basically prove that the other side doesn't have a chance. They have a chance in hell. They have to have no argument they can make to a jury.
Yeah.
Rational. That's what it ends up.
Yeah. And my experience, like, you know, real world experience is that it's very difficult for them to get that summary judgment.
It is correct.
Yeah.
The other side, all they have to do is say, well,
Right.
you know, we have this child that saw people doing something and here's an affidavit and
Yeah.
you're off to the trial.
The creative writing I see and the allegations, you know, from the other side is unparalleled. Like, you know, if they don't make it in law, they could write books, you know.
AI only increases that.
Yeah, yeah,
Yeah.
it's really unbelievable, like how creative they can get with that narrative. Yeah. Timeline, I showed this last year as well, because just showing how the legislation, again, same thing I said previously about the way government works is they generally are responsive, not proactive. So all this stuff, you know, and then we have the hurricanes that hit and all of those claims, and you know, the fact that, you know, the greatest sign to me or indicator that the legislation will be effective is the amount of lawsuits that were filed the week before. You know, if you look at this stuff like I do, all you have to do is see how many lawsuits were filed right before the law went into effect. And the more lawsuits that were filed, the more hope we have that the change will be positive. So 708,255 claims were filed right before some of this legislation changed. So they were scared. They had to get their lawsuit in before the change impacted their ability to make money. And you can see that there's an indicator that the laws are working when you see the defense cost and containment expense ratio go down that dramatically.
Wow.
Just more on kind of a drop in litigation. Now, I stood in front of some of you last year and said that the only thing that really will change the market conditions is competition. Companies either starting to write again, or companies that doors. So we either need new companies or we need companies to start writing again. And That's what's happened. We have, I think it's either 17 or 18. I want to say 18 because like 2 weeks ago, I think I saw another company get approval. The process is they have to go through the OIR, Office of Insurance Regulation, and then they need to get a COA, Certificate of Authority, to write in the state of Florida. Now, good news, bad news. Good news is we have more competition, 17 or 18 companies. Bad news is those companies only need $25 million to start writing insurance policies. That's it. $25 million and you get a certificate of authority. Now you still have to go meet the certain requirements in terms of having reinsurance to a certain standard to survive, a major natural disaster. But a $25 million insurance company balance sheet is not much at all. We talked about the shift in the market and the hyper competitive, we're seeing, it's really not uncommon to see 25 to 40% decreases year over year on the line items for condo associations right now. Going back to the supply and demand issue, more companies quoting means that we should all see better premiums, better coverage.
Is this affected homeowners policies too? The same way?
Yes. So thank you, because I always want to remember during this difficult time in the insurance market, unit owner policies were also doubling in some cases. So some people chose to drop those policies or maybe take the wind off. It's time to circle back and revisit that. At least take a look at it. I'm not here to sell insurance, but it's definitely the time to, if you dropped it because the cost was getting out of control, it's time to circle back and take a look at it, because it has come down. This is just a list of some of the companies. In fact, most of those companies are homeowners companies. So 18 companies have filed, and 4 of them are doing commercial policies, which is condos are considered commercial policies.
Are all those companies backed by FIGA?
They are. So if they go through the Office of Insurance Regulation in Florida, then they are backed by FIGA. The other market is that's the admitted market. In Florida, we have fundamentally like 3 marketplaces. You have the admitted markets, which are approved by the state of Florida and the Office of Insurance Regulation. You have the non-admitted, which are generally right in all 50 states and most likely even globally. They're usually big companies, but they aren't regulated or overseen by the state of Florida. And therefore, they don't participate in the FIGA program, which is the Florida Insurance Guarantee Association, which is kind of a safety net. If the company goes out, Florida will step in and through that program and pay claims, which we've seen that actually work very effectively. After Hurricane Wilma, FIGA paid a lot of those claims. We had 800 million in my company, and a certain percentage of that was paid by FIGA, because there was a big company that wrote a lot of associations that failed. The actual cash value issue on the roofs has sort of gone away with everybody having gotten new roofs or likely getting new roofs soon. If you look at kind of what's happened in Florida's history, 2004, 2005 were the big lost years in terms of the 2004 hurricanes, and then Wilma in 2005. So a lot of buildings have roofs that were done in 2006, 2007, 2008, and those roofs are at the end of their useful life. We have major roof projects. I'm looking at some are in full swing right now. So, the insurance industry looks at it as if, from a perspective of flat roofs have a useful life of 15 years. If you can demonstrate it's well maintained and good condition, you can push that sometimes to 20 years. But they have learned when going into these areas that have been hit by major storms that a roof that's 10 years old is still on the building and a roof that's 17 years old is in the parking lot. And so when they say remaining useful life, it might keep water out. It might, still be doing other functions, but at 17 years or 20 years, it's less likely to stay on the building in a building. That's the issue. So I have heard from all the roofing industry, and this roof is a 30-year system. Great. That's kind of a general statement. What about Florida? Where we have a climate that is very unfriendly to roofs. This is not, insurance, getting a new roof opens up the marketplace. You can likely still get insurance with an old roof, although you do hit a tipping point, but it's going to be very expensive. You may have depreciated value on the roof, which means it's worth zero, because we always use the car drove off the lot conversation when we talk about depreciation. You buy a new car and the minute you leave the lot, it's worth less. That's nothing compared to what a roof does on a depreciation. A 15-year-old roof is worth nothing. There's no value to it. So if you have a policy that has what's called actual cash value or depreciated value on your roof, and the roof is lost in a windstorm, you likely have no value to that roof at all. So some of these coverages, and I'm going to go through quickly, I'm just going to talk about how, because the market has shifted and we're all going to save money on our premium, it's really an opportunity to open up a conversation with your agent. Great, you saved us 30%. Love you for it. What about coverage? What can we push in terms of getting better coverage? Because what all of us saw during the difficult market was huge increases in premium. And it's easy to put small number next to a much bigger number. But what's not as easy to discern is, what about all the coverages that went away? Because at that same moment, you were paying more and getting less in coverage. Okay, the building value may have stayed the same, or if you had an appraisal, maybe the building value went up. What I mean is that in the policy, terms were changed, coverage was removed or decreased. So now is an opportunity to realize the savings and push the insurance companies to add back the coverage terms that we enjoyed pre-2019. So that's what we have been really pushing at my company is, you're going to save 30% or whatever the number is. But now we got you more ordinance or law. We reduced your deductible. We got you a calendar year hurricane deductible instead of a per event named storm hurricane deductible, which means that you have one deductible if there's 5 hurricanes or 1 hurricane, versus having that big deductible every single time a storm might impact your building. That's tremendous value. And these companies, when you ask for that stuff, a lot of times they'll give it to you for no change in premium. It's just a matter of knowing to ask. That's the part that I want. That's the takeaway for today. Push your agent, whoever you work with, to make sure that they're also, because the problem is that condo boards tend to push price reduction, not in lieu of, but without knowing they could also get better coverage. So, we're going to deliver a price savings, but you also want to make sure we get better coverage. I talked about the windstorm deductible, the calendar year deductible versus the named storm. That's what this is. I'm skipping over that stuff because this is kind of a graph that just shows how many companies failed in the last 2 cycles. So this kind of shows you the cycles I was talking about but from a perspective of how many companies failed during those difficult times. And here's the policy count from Citizens. So the last time Citizens spiked, no surprise, was right after the 04-05 storms. And then it leveled up, it decreased significantly, hit a bottom, and spiked again. And then you can see how it actually is now below 400,000. So we're lower than we were when the last time the cycle started.
Go back to that one. Fun. Thank you.
Yeah. It's probably a real billboard. This talks about, we touched on this a little bit about the nuclear verdicts, the fact that another anomaly in the market is that historically we have seen and adjusted for present day dollars, we've seen more verdicts that were considered what they consider nuclear verdicts, meaning like huge numbers in the last 10 years than we had in the previous several years. So that's another thing that's kind of, causing the liability market to still not recover fully. We talked about the exclusions that we're seeing in policies. Injury to independent contractors, subcontractors exclusion, assault and battery exclusion. Now, assault and battery, I haven't met a board yet that didn't respond to that with, no, that wouldn't happen in our building.
Yeah, until it does.
But the thing is, like, assault and battery is broad. Like, as a definition, I mean, if you were to read this, like, it doesn't have to be somebody punched somebody else. I mean, it could be less, and still trigger that exclusion. And again, we talked about the creative writing on the plaintiff side in terms of what they will allege. If they allege they were assaulted, it could trigger this exclusion under liability. Now, more than likely, we would get a reservation of rights letter from the insurance company that basically means that one or more of the allegations appear to be excluded in the policy, but there's other allegations that could trigger coverage. So we're gonna take this on, but we're gonna reserve the right to not take it on forever if one of those allegations sort of leads the problem. Did I say that right? Kind of?
Yes.
Okay. So that's what's troublesome about the exclusions. When you get one of these lawsuits, it's never one complaint. It's usually many complaints and very creatively written. Firearms exclusion.
Is that stemmed from the new law from Florida that anybody can carry a gun and?
No, I don't think so.
Okay.
I don't know, but I'm just saying, like, been doing this a long time. And, in my office right now, we have, I know of 3 open claims that involve firearms. Now they're all down south, all 3 of them. But I can't remember 3 in the prior 25 years or 26 years of doing it, So definitely an increase in gun-related issues, but I don't think it stems from, the changes to the constitutional carry, laws.
That went into effect last September is
Yeah.
the one I'm talking about.
Yeah. Because these are, in my opinion, these are people that were carrying guns way before that changed, These are not people that felt that they were now able to lawfully carry a concealed weapon. I mean, I have one right now that's very difficult with, and it's domestic, ex-girlfriend, new boyfriend, waiting for their car at a valet stand at a really nice luxury condo hotel building down in Hollandale. Old boyfriend drives up and shoots everybody at the stand. Jesus. New boyfriend, dead, ex-girlfriend, paraplegic. One of the valet, guys was also shot but not killed.
And they're suing the association.
Yeah, to
Absolutely.
me, that's a crime that you would go to court with for criminal, not association suing. That doesn't make any sense.
Yeah, there's a, right now it's reserved at 2.5 million
Jesus.
for on the association's policies. Yeah. And by the way, the valet company, not that they should be at fault, but they're getting sued. It's third party, they contract with them. Pretty much everybody around is.
To me, that's just abuse of the system.
Yeah.
Yeah.
Barbara, just as a note, I mean, if the judge finds that it's frivolous, they can tax attorney's fees against the people.
Right.
To the people claim, yeah.
So it's frivolous.
Yeah.
Yeah.
But a lot of times the insurance companies will claim before even being seen before a judge.
Yeah.
They'll settle,
They'll settle.
which is again, a problem because it just continues the cycle.
But it's a
of
money
people.
pit, yeah.
Yeah.
They're balance sheet, and they make that choice.
I know.
The number one by far insurance company that I saw like really fight these like to the death kind of thing. They were the ones that were like this, if we get a claim like this and they feel like they have a good case, they would actually go all the way with it. That company, like 2.5 years ago, dropped 1,800 people in Florida, associations, like just, we're not doing liability anymore. So it kind of just shows you like they were the ones that was like, you know, if we feel like we have a case, we're gonna push it no matter what. And like 2.5 years ago, they were like, you know what?
We're done.
We're done. We're not doing this anymore. This is just this one is an exclusion that always concerns us because it basically says that you have coverage at the pool if you have all of these things in place at the time of the incident. And the concern is this one's not as bad as some of the other ones I've seen, but I've seen where, you know, you have to have it posted, the swim hours, the depth markers, the life safety equipment has to be there. And everybody might say, yeah, we have all that stuff, but what happens when, you know, there's a couple of kids visiting from spring break and they grab the life ring and take it out in the ocean and don't bring it back. And then somebody drowns in your pool. And that life ring's not there, you now have no coverage because the exclusion says if it's not there, there's no coverage. No matter what. One of my clients has a drowning right now. It doesn't appear like there's going to be any lawsuit over it, but they're on Singer Island, somebody did drown very recently.
The Aquarius.
Yeah. So a lot of the time, when to have these conversations, you can have them when you're doing your budget conversation with your agent. I hope that your managers reach out to your agent, whoever that is, talk about budgeting, look at the appraisal because that can be a kind of a hidden whammy. Appraisals are still going up, not as much, 5 to 12% instead of 15 to 40%, but still going up. These are required by statute. You're required every 3 years to get an appraisal. Communicate what you're looking to accomplish. So better coverage. We know we're going to save money, but we also want to get better coverage where it makes sense. So there were some changes to the federal lending programs. They do now, again, this is kind of ironic or funny because I've already talked about how government is never in front of a problem. All of the issues with roofs have basically played out because everybody that had a roof that was 15 or 20 years old ran out and got new roofs already. And 2 weeks ago, the federal housing Fannie Mae and Freddie Mac, adjusted their guidelines to now allow buildings to have actual cash value on their policy for roofs. So that was one of the big catalysts for people going out and get a new roof. Two catalysts where we have to have insurance. Sometimes you hit a wall where you can't get coverage if your roof's too old. And we can't buy a policy that has depreciated roof because then people with mortgages are either in default or won't qualify for a new loan. So they change it now that you can have an old roof and you can buy a policy with actual cash value, but the problem is almost gone. It's like basically gone now. Everybody has gotten new roofs. The other thing is, while I appreciate this incredible flexibility in this program because it's generally not flexible at all, the reality is that if you bought a policy with a company and it has language in there that depreciates your roof using what we call actual cash value, the premium is the same as if you have replacement on the roof, because the policy says the building has replacement cost insurance, and then in the policy, buried very deep, there's an exclude or a language that says if the roof is over 15 years old, the claim will be adjusted using actual cash value on the roof. So you don't, there's no saving money to buy this policy. Like some people would say, well, if I can get a policy with, I'm willing to roll the dice and take a policy with depreciation on the roof. Let's see how much money we're going to save. There is no savings because the minute you replace the roof, you don't change the policy. It just means that exclusion or that adjustment factor doesn't apply. So there is no opportunity to save money with an old roof. It's really actually the other way around. This is the statute that says that you have to have replacement cost. The Florida statute 718-111, section 11A. All right, that's pretty much what I wanted to cover. I just thought this graph was kind of cool. It's a little overwhelming at first, but it shows storms back to 1851.
Jeez.
Yeah.
There's no escaping it, is there?
No. Well, maybe the armpit, that little yellow.
Yeah, where's that? Vidalia.
And then these are just some graphs. This is a flood map, and this is where we're sitting right here. So the shaded blue, and I'm going to show this one actually, it's easier to see. That's the north end of Singer, and then this is the south end. The brown or the gray areas are the higher areas that are anticipated to not flood. But this is definitely unreliable because, for example, in 2017, and when Houston flooded, 70% of the areas that flooded were deemed to be low risk by the federal government. 70%. So this is an overlay on a satellite imagery that's used. They use what's called LIDAR to figure out the undulations in the property. And this makes sense because your buildings are all on a natural berm, a sand dune, and they're higher. It slopes down to the intercoastal waterway.
Except if you live across the street there, some of these folks do.
Yeah.
But you what? You were, oh, okay, good.
Yeah. So, but you can see, as you go up to this should make sense to those that either know this area or live in this area. These maps should make a lot of sense to you because your buildings are definitely like generally the highest point. And then when you go to the north end of the island, where the park is, it's definitely lower in terms of elevation.
Right.
Yep.
Okay. We have time for questions if anyone has questions for Brendan.
Yeah.
Okay. Well, thank you, Brendan. You
Yeah.
always give us a lot of good.
Thank
information.
you.
We appreciate your coming every year and
Thank you.
I hope you come back and see us again next year. So if there are no other questions, I want to remind you that we'll be sending out the survey again, and we count on that survey to help us figure out what kind of sessions you want to have for next season. So please be on the lookout for that and have a safe, restful, happy summer season. We'll see you when we convene. Oh, one,
I just have a question.
Sure.
Our association has had trouble with the Sears report. We had an engineer come out and he keeps putting it off. It'll be next month, you know. And the drop date was last Thursday. He didn't have it. Are other associations having trouble with the Sears report?
we have not heard from any other associations, but can anybody here? If you send me an
What is-
email.
What association are you with?
Côte d'Azur. If you send me an email, maybe we can put something out to the general membership and ask that question for you and see who
Yeah.
responds. Yeah.
So
Okay.
We'll do that.
I can chime in on this. So what I'm seeing is, you know, there was associations that kind of ran out and, you know, right away complied with those new requirements early on before they were even required. And there's this sentiment, and I don't know if it's actual or if it's, you know, just what's being marketed by these reserve companies.